welcome to this episode of the Maryland Risk Management Education Podcast. My name is Paul Gehringer. I'm the host and Extension Legal Specialist here in the Department of Ag and Resource Economics at the University of Maryland. And today we're going to talk a little bit about gleaning unharvested crops and crop insurance coverage or NAP coverage on your farm. I know that's an exciting topic, but we are going to talk about this because there are potential downfalls if you do allow gleaning of unharvested crops on your farm and do have crop insurance or NAP coverage on it and don't follow the proper processes. You may get in trouble down the road, and just want to kind of clarify some of this before you do it. During the growing season, producers may allow various nonprofits to collect unharvested crops on their farm. After harvesting, in many cases, it may not be economically profitable to harvest this unharvested portion, or the producer may have had to leave crops unharvested after meeting supply needs for a week. There can be a lot of reasons why you leave unharvested portions and then allow someone to come back on and glean them. These crops might have been left to rot in the field if not for the ability of nonprofits to then come back in and glean these things for donations to feed hungry people in the state. I've written about this on the Maryland Risk Management Education blog, and I'll do a podcast over it here in a couple of weeks too, probably. But based on this, what I've written on, it's all about the liability issue in that post. But with this, if you got crop insurance coverage on these, the question is gleaning allowed on insured acres? The Federal Crop Insurance Corporation, or FCIC, and the Non-Insured Crop Disaster Assistance Program, or NAP, have requirements an insured producer should meet before allowing gleaning on their farms. The Federal Crop Insurance Program does encourage you to allow gleaning on your farm. To qualify, the insured producer would need to allow gleaning by a 501c3 nonprofit organization, for example, the Maryland Food Bank, and receive no compensation for the gleaned crop. Before allowing gleaners to glean an insured crop, the insured producer is encouraged to at least double check the charity's eligibility with their crop insurance agent. The gist of this whole episode is going to be always make sure you check with the appropriate person just to make sure everything's going to be okay. So what are the crop insurance requirements for gleaning? The FCIC's only allows gleaning from a nonprofit organization. The charitable organization must be a 501c3 nonprofit. Gleaning by a charitable organization is allowed on unharvested insured crop acreage when normal and proper harvesting methods cannot harvest the unharvested portion. For example, unharvested oversized potatoes left by normal harvesting methods might be allowed. Other unharvested crops might qualify for gleaning when provisions in the producer's crop insurance policy allow for crops not meeting specific standards to be counted as production, such as peppers or tomatoes not meeting requirements in the crop insurance policy might qualify. But before gleaning or allowing gleaning, check with your crop insurance agent just to make sure everything's going to be okay. Another requirement is the insured producer can receive no compensation for the gleaned crop from the charitable organization. It's also true when we talk about it for relaxed liability standards in Maryland as well. The insured producer may be reimbursed for harvest costs and transportation costs. For example, the insured producer uses his own labor to glean the remaining insured crops and then donates them to a local food bank. The food bank, in this case, could reimburse the insured producer for the cost of labor in transporting the donated crop to the food bank, but could not compensate the producer for the crop itself. If the insured producer receives any compensation for the crop itself, it will not be considered gleaning for crop insurance purposes. In many cases, the insured producer could receive a tax advantage either under state or federal tax law for donating the gleaned crop. The tax advantage, such as a tax deduction or a tax credit, will not be considered compensation for the crop and is allowed by FCIC. So those are pretty much the crop insurance requirements. What if we're dealing with the non-insured crop disaster assistance program, or NAP, for gleaning? What are those requirements? NAP also encourages producers to allow gleaning on the participants' farms. But before allowing gleaning, the producer participating in NAP must contact the county farm service agency to get the approval of a qualified FSA or FCIC loss adjuster to release the acreage. The only exception to this requires FSA to determine the types of records that a producer or gleaner will need to be shown to keep on the quantity of crops gleaned. As with crop insurance, just basically before allowing gleaning, go talk to someone in the local FSA office for approval first. So to kind of wrap all this up, both of these programs seek to encourage you to allow gleaning on your farm, but before allowing it on your covered acreage, always check with the appropriate people first. With crop insurance coverage, talk to the crop insurance agent to determine what you need to do to make sure you're going to stay in compliance with your policy if you allow gleaning. With NAP coverage, always check with the local county office first to make sure those acreages can be released and what records you will need to determine the quantity of the crop gleaned. If you have any questions on this or any other episode or future ideas for episodes, please email me at lgoering@umd.edu, or you can tweet me at aglawpaul. Thank you and enjoy the rest of your day.